Here was good. Welcome to another episode of Cheef and Chart, brought to you by Rap and Dough, the home of money conversations. This is episode Apple Sunday. Edge confirmed. So, for Rap and Dough, we talk about all things Black wealth. This particular series, we talk options trading. So, if you're into options trading, hit the like, subscribe, notification bell. If you want to learn how to trade options with confidence, that's what we do over here. But as we talked about yesterday, today's Friday, of course, end of the week. Hope everybody had a dope week, productive week. But my little spiel, I get my little spiel at the beginning. Oh man. So I had a little hiccup in business, right? Had a little hiccup, this rental car. And I swear, man, it's hard. I ain't gonna say it's hard. I ain't gonna even say that. I see why some people are hesitant rocking with us, doing business with us, man. It's like, come on, man. You can't just do straight up business. Right? Why would we be trying to get over on each other? So, like, not all of us, but we feel more comfortable trying to get over on each other. I don't get that. Like, it's kind of like a version of insulting my intelligence. You know what I'm saying? I was talking about that the other day. Like, people really be pushing your patience, but you got to take the ups with the downs, right? It's a learning process. So I'm not mad. I learned a few things during this process. This is my first runner. Had about a month and a half, so that was a good run. But man, my people. I'm gonna just leave it at that. But let's get into this chart. Edge confirmed, y'all. So it feels good when your edge is confirmed and what you said happens. But I don't want y'all to get to, start reading your press clippings. You know what I'm saying? It's okay to be right, but I need you to keep the same energy when you're wrong. Meaning, you can't, don't get overly excited or overly bent out of shape. I need you to be an analytical, like mechanical. It needs to be mechanical. You can't be emotionally attached to this thing. It needs to be mechanical. So, yesterday, what did we see yesterday? This was yesterday's bar. Let me make the screen bigger, per usual. So, this green bar was yesterday. This is the daily chart. And this is what we start off. This is our long-term time frame. This is what we position for in our trading time frame. But starting here, we draw our levels. So you have to draw your levels to know where price is going, potentially going. Right? You know this is a level already. Right? Where price has went and touched 2 or more times. So let's see here. We got 1, went up and stopped. Boom. This is 1. Broke through, came down and stopped. Right? So this is a level. If I take this all the way back, it'll probably, matter of fact, let's do it. So I can show y'all. Take this far enough back, you'll see it's a level. So all you gotta do is count the areas in which it came up and stopped or came down and stopped. So this is a level. Let's make this bigger. All right. So this green bar was yesterday. Let me bring this over. All right. So what we said yesterday was that we have a new high in the MACD because it opened down the day before. So this was the day before it opened down here because we was waiting for it to finish. We wanted some more weakness before we entered. So this is our patience waiting for our edge. That was yesterday's title, waiting for our edge. So what did we say? We said yesterday, you'll see what we said yesterday based off the trading time frame, but we have a new high in the MACD with weakness. We need to wait and see how much weakness because this is a momentum divergence. Momentum to the upside on the MACD, because that's what the MACD measures, momentum to the upside, a new high compared to here, right? So we need to wait for weakness because weakness with strength equals a momentum divergence, which equals it's going up after the weakness. So we need to position for that. So we drop down into a trading time frame. I used a 2 hour. And now that one bar is broken down into 4. So yesterday we were here. This was the end of the day. So 1, 2, 3, 4. Make this bigger. These 4 was yesterday. These 4 today. So today, what did we say? I said you can enter at the base. No, I'm sorry, that was yesterday's title. Entering at the base. Waiting for your edge, entering at the base, I believe. I know it was entering at the base. So this is the base because this is a resistance level and it didn't reject off of it. So it's hugging it, which is indicative of a break, which I said yesterday. So I said this bar here, I said it's going to bust through. So you could have entered here. So let's go down to the relatable of the 2 hour, which is the half an hour. So where were we yesterday? Boom. This is entering at the base. So each one of these, because we know it's a new high in the MACD, so we're looking for weakness. Each one of these red bars we could have positioned yesterday for today. Each one of these red bars, because we know it was a new high in the MACD in the daily, because that's what we're positioning for. So we drop down to see where we can get in. We're looking for weakness. All right. So we see it's hugging. They don't want to go down. It's hugging. So, all right, each one of these red bars was an entry point. Because then this morning, at the end of the day, it showed us right here. It began. All right, it's where it began. So then this morning, it opened up here. So this is what I'm saying. The new high in the MACD shows us what we're looking for in the lower time frame. We're looking for weakness. But we got to make sure we're using the right time frame. So if you have to use your trading time frame and your relatable. So mine is the 2 hour and the half an hour. So I'm using let's say I look at the daily and I said, boom, this is Thursday. New high in the MACD. I don't want to enter on this green bar because I can't see shit. So I'll drop down to a trading time frame, which I selected, and I showed y'all how to do that in the course and in previous videos. Because by the way, this is episode 93. Episode 93, y'all. So y'all should be making progress by now. Um, so I dropped this to 2 hours. So I'm like, I'm looking for weakness. All right. Where's the daily? All right. So boom, this was Thursday. So yesterday, I went over this. Let's go over it again. Yesterday, I'm looking for weakness in that green bar. And here it go right here. I would have been waiting for this. And then boom, at the end of the day, it showed off. And then this morning, it showed off some more. It broke through. But remember what I said, you can either enter at the base or enter on the pullback after the bust through. So here's your second entry. Because we still have a new high in the MACD. It's going to the next level. You just need time on your contract to wait for it to get here. The next level up is 402. So here was your next entry this morning. And then another one right here. As you can see what happened, look, it tested the level. Remember, after it breaks the level, it tests it. So broke the level, and here's the test. Some tests fail. We seen that episodes ago. Some tests hit and fall. But here's good price action. Test and bounce. So here, both of these were another entry today. Going into next week. So now, if you're not in it, your best bet is to, you can't trade, of course, tomorrow or Sunday, but Monday, if it doesn't hit this level Monday, I'll be waiting for weakness. But we just have to wait now. You missed it. You missed it for the past 2 days. If you're not in it already, or anything that corresponds with the SPY, because the general market is the SPY. So a lot of the other stocks follow what the SPY is doing. So your stock, if it correlates with the SPY, which it should, if you're dealing with quality companies, I show y'all how to pick those as well in the course. All right. It would be, your chart will look similar to this. You dig? So Monday, this thing's going. It's going to the next level. We got a new high in the MACD. It tested the level after breakthrough this morning. It's going. So if you're in it, congratulations. You know what I'm saying? Cash out the next level. It's your man, Don Bucks, man. Edge confirmed. If you want to learn how to swing trade like this, make sure you hit the description of this channel. Also, make sure you get your free Options Made Easy workbook. All you gotta do is pay for shipping and it's yours. It's a full breakdown of all the concepts I go over, questions, so you can write it out and really get it. If you don't know the answers, you can always go back to these videos or go to grab my course. But if you want to cheat, the answers are in the back. But you know what happens when you cheat. I was just telling that story the other day. I was cheating in chemistry class. Cheated, did my we had lab. No, it was physics class. We had lab, and it was a group of us. I'm gonna give y'all this little story before I get out of here. They put us in groups in physics class. This is in college. And girl in the group had the bright idea to go online and get the answers to the dittos we had to do for homework. Cheated, but this was a concept that was type hard. You feel me? Why we didn't think that it was going to show back up on the test? Why, when the test came, majority of the test was that concept that we cheated on? Motherfuckers got like a 30 on that test, man. I never cheated again. For the rest of my college tenure. So Word to the wise. Get these concepts and get them legitimately. You feel way better about your success. That being said, always remember, ain't no competition. It's always you versus you. See y'all Sunday.